No student loan has been referred to collection since March of 2020. That comes to an end. On May 5th, the Department of Education will resume involuntary collections for borrowers with defaulted federal student loans.
What you just heard is about to affect millions of Americans. And if you're one of the 5 million people with defaulted student loans, or one of the 4 million more on the edge of default, this is gonna hit your wallet, your credit score, and possibly even your paycheck hard. But don't panic yet. Today, I'm breaking down everything that you need to know about the student loan collections restart happening on May 5th. So here's what we're gonna cover: how we got to this point and why it matters, what's actually happening with these collections, and most importantly, what you can do right now to protect yourself. So let's rewind back to March 2020. The pandemic hits, the economy is in freefall, and something unpredictable happens. The government puts all federal student loan payments on pause. No payments, no interest, no collections. For many people, this was a lifeline during the toughest financial crisis of our lifetime. This pause lasts over 4 years. Think about that. 4 years where millions of Americans didn't have to worry about their student loans. Some people use that breathing room to build emergency funds, pay down other debts, or simply survive when jobs disappear. Others, well, they just got used to not having any student loan payments. In fact, according to the reports I've been analyzing, many borrowers don't even realize that their loans went back into repayment last year. The Biden administration did provide a 12-month grace period where missed payments wouldn't count against you. But that ended in September of 2024. And now, the Trump administration is bringing the hammer down. As Press Secretary Leavitt put it, this is unsustainable, unfair, and a huge liability for American taxpayers. Debt cannot be wiped away, it just ends up getting transferred to others. Here's the shocking truth. Right now, the federal government controls nearly $1.6 trillion in student loans. But fewer than 4 out of 10 borrowers are actually making payments. The administration's view on this is pretty straightforward. If you take out a loan, you have to pay it back. It's very simple. And that brings us back to what's happening right now. May 5th is the day that everything's gonna change. For the first time since 2020, the Department of Education will refer defaulted student loans to collections. But this isn't your typical collections agency calling you at dinner time. This is the Treasury's Department offset program, and they don't play around. Here's what they can do. They can take 100% of your federal tax refund, garnish up to 15% of your Social Security benefits, seize up to 100% of other federal payments that you may have. And starting this summer, they begin taking money directly from your paycheck before you even see it. Again, let me be crystal clear. This isn't like ignoring calls from some random debt collector. This is the federal government. They don't need your permission. They don't need to sue you. They will just take your money. And it gets worse. Being in default absolutely destroys your credit score. We're talking about potentially 100 plus points overnight. Bad credit means higher interest on rates on everything, difficulty getting approved for apartments, trouble getting car loans, even problems getting certain jobs. Some states will even revoke your driver's license if you default on student loans. It's a financial nightmare that can follow you for years. But here's what most people don't realize. This isn't just affecting people who never made payments. There are millions of borrowers who accidentally missed payments because they didn't realize student loans had fully gone back into repayment. In fact, about 4 million people are currently 90 days past due on their student loans. And if you're 270 days, about 9 months, without making a payment, you're officially in default. But here's something even more troubling happening. The Trump administration is dismantling parts of the Education Department. Many employees at the Federal Student Aid Office have left, lost their jobs, or resigned. This means borrowers are having a harder time getting help when they need it the most. Loan servicers like Nelnet and Mohia are being flooded with calls, but here's the thing. You don't have to be one of them. If you have student loans, the first thing that you need to do is figure out if you're in default. So go to studentaid.gov right now and check your loan status. If you're not in default, then great. Make sure that you're making your payments on time to stay out of trouble. But if you are in default or heading that way, you got a couple options. First is income-driven repayment plans. These plans cap your monthly payment based on your income. Some people qualify for payments as low as $0 per month. And yes, a $0 payment officially counts towards a payment. These plans take into account your family size, income, and expenses. They're designed to make your payments affordable no matter what your financial situation is. After 20 to 25 years of payment, even if those payments are $0, any remaining balance is forgiven. Second is loan rehabilitation. This means agreeing to make 9 consecutive on-time payments. The amount is often reasonable, typically 15% of your discretionary income. Once you complete the rehab, the default is removed from your credit report. This is a one-time opportunity, and you can only do this once, so you gotta make sure that it counts. But it is one of the best ways to get out of default and repair your credit at the same time. Third is loan consolidation. you can consolidate your defaulted loans into a new direct consolidated loan. This gets you out of default faster than rehab, but the default notion stays on your credit report. Consolidation can be a good option if you need to get out of default quickly. For example, you're applying for a mortgage or a car loan in the near future. It combines all of your federal student loans into one new loan with one monthly payment. And fourth, a possible loan discharge. You can possibly get your loan discharged based on your school's actions. One could either be your school has been closed, or if the school misled you. This either can be going to school with false certifications, unpaid refunds, or just promises of giving you a job afterwards. So if you're catching my drift here, there are plenty of schools out there who have been in lawsuits about making false promises or just boosting their statistics of how many of their graduates actually get jobs. But the key is to not ignore your student loans. You have to be proactive now to save you from having your wages garnished later. But here's something that most people don't know. You might be able to get those student loans removed from your credit report completely. With all of the changes that's happening right now, including the possibility of transferring student loans from the Department of Education to the SBA, there are gonna be tons of errors on how these loans are gonna be reported. Here's what you need to know. For a student loan to be legally valid, the loan servicer must be able to provide your Master Promissory Note, which is an MPN, with your original signature, chain of custody documentation showing legal transfers of servicing rights, proof of their legal authority to furnish data amid federal education program restructuring, and a full ledger of the deferments and forbearances. Here's the thing. Many loan servicers can't provide these loan documents within the required 30-day timeframe. And if they can't, according to the credit reporting laws, they have to remove the loans from your credit report. So if there's no MPN, no student loan debt should be on your credit. So with all the administrative changes happening right now, this is the perfect time to challenge your student loan reporting. I've made it super simple for you. I've created template dispute letters that ask all the right documentation in exactly the right way. Now, this doesn't guarantee that they will remove it, but you won't know if you don't try. This exact process helped my previous client Axel remove a bunch of his student loans. You can find the templates by scanning this QR code or down in the description. Now, the thing about credit repair, especially when it comes to federal student loans, is that information can be removed from your credit report. But this does not stop them from doing what I mentioned before, such as taking money away from you. Now, with the negative items or debt off your credit, this essentially protects your credit score whenever you need it. If you'd rather not send out the lenders or fill out your info, I do have a software that does the repair for you. All you gotta do is just link credit monitoring. It tracks which bureaus that you disputed, you get reminders on follow-ups, and it even generates letters based on the exact errors on your report. It's a software that turns anyone into a credit repair expert in minutes. This software keeps you organized, saves time, and even gets you better results. Similar to Savan, he was able to remove student loans during his first round of letters. The link is down below if you want an easier approach. Listen, I know this stuff is stressful. Student loans, credit problems, wage garnishments. It's a lot to handle. Millions of Americans are in the exact same boat right now. The key is to take action now, before the May 5th deadline. Check your loan status, explore your repayment options, see your discharge opportunities, and start working on your credit today. Drop a comment below if you have any questions. I'll read them all and I try to respond to as many as I can. I'll see you in the next video.